Okay, my beautiful friends, sit down and relax because this is my newest segment of Markets A Look Ahead. We have a lot of stuff to talk about, and what a week we are about to have here. Actually, moving forward, this whole thing, this freaking freak show is about to get much more freaky. And we're going to cover why. I think most of you understand what's about to happen this week. It's unprecedented. Actually, it's all part of the same thing in many ways, and I don't think it's a surprise to anyone that follows this blog. What do we know is going on? An unbelievable effort here, a Herculean effort, that's what I've been saying, by central banks to stabilize the debt market. In other words, to foster or continue to foster an environment of risk. Keep rates artificially suppressed for as far as they can possibly go with this. Again, it's not going to work. In the grand scheme of things, the effort going on by central banks who do have unlimited firepower. Believe me, look, I read the comments and, oh, Greg, you're wrong. Central banks do not have unlimited firepower. Yes, they do. Okay, but there is a cost for it. I've been explaining this a lot as of late. Central banks, Federal Reserve, European Central Bank, pick one. All they need to do is add digits to a screen, and they can do this in any amount that they want to at any moment, okay, without even the slightest bit of oversight. This is what they are allowed to do. Okay, they take this newly created fiat currency and they can do essentially anything they want to do with it. Okay, there's no oversight. Federal Reserve can do anything it wants at any moment here. So they have unlimited firepower, meaning they can issue debt in any amount and do whatever debt, meaning, look, currency, these are units of debt. They are not units of wealth. Each one of those bills that you have in your pocket or you think you have in your bank account, you don't even own these things, okay? It's a Federal Reserve note. It's an IOU. That's all it is. You may feel all happy about, all the bills you may have in your wallet or your bank account that you think are there that aren't actually, or whatever it might be. They're not yours, okay? These are issued by a central bank, and they are owed back to the issuing central bank, plus lovely interest that they just create magically out of thin air. If people really understood, again, the how twisted this system is, I think they would run for the hills. But anyway, so this week begins an unlimited bond buying program by the European Central Bank. This will and has to be followed up by other central banks, including the Federal Reserve here. And I'm going to read something to you in just a little bit. I want you to come up with your own conclusions, but I want to read this to you. I want you to have it. As a matter of fact, I'm going to place a link to this document right here. Okay, I want you to have this in the description of this video. Make a copy of it, share it, do whatever you want with it, but it's important. And again, I want you to have this thing. So understanding now that this week we are going to see the European Central Bank, it's kind of funny how they word this. It's a new tool. Same thing like the Federal Reserve. They love their tools. Tools. They have one tool, central banks, one. Okay, I don't care what they're trying to sell you. They do have unlimited ability to issue debt and manipulate debt. That's their only tool. How are they going to twist debt around here? Now, by central banks like the European Central Bank now getting in here with their new tool of unlimited bond buying, this has the potential to have a ripple effect through all of the markets. Okay, now what generally do you understand? And I want to hear from you. Please comment here. When a central bank decides to, again, get in here and buy all the debt, like I just said, what is the effect of that? Well, it's just keeps rates suppressed and fosters an environment of risk, meaning it's attempting to push cash back into the stock market. Now, we all know how this played out. We had that uncontrolled sell-off in the 10-year yield here in the United States, around the world, okay? They don't want you to remember this, but just several weeks ago, bond yields around the world were rising and rising and rising. This was a sell-off, a pan sell-off in the debt markets. And what did that do? It hit the stock market. So ECB jumps in, European Central Bank, Federal Reserve, trying to stabilize the debt market. Now we have this new move, okay? This new move has a couple of facets to it, okay? Understanding that the system depends on the relentless, pumping of debt into the system in order to function. Well, this is just another avenue to do that, okay? And I don't want to give away too much because I really do want to read this to you. But let's just look back on Friday, just for example. What happened on Friday here in the U.S. equity markets when it was announced? This was first released by Bloomberg. Now it's everywhere. That the European Central Bank was going to embark on this unlimited bond buying program. Well, it gave a nice shot in the arm to the stock markets, higher across the board. 10-year yield coming down, 2.91. Dollar got a little weaker, as you noticed. And, that was generally the effect of it. So, with that said here, let me just read this to you. So, because I don't want this video to be too darn long, but I want you to pay attention to this. And like I said, I want you to have it. So there is a link to this in the description of this video. All right, people. So sit back, take a sip of your coffee. Okay. I have yet to have my second cup, but I want to read this to you. So here we go. This week, lovely. Central banks, beginning with the European Central Bank, embark upon yet another round of debt market super rigging. This new round of debt market manipulation on an unlimited scale is to further allow central banks to continue to inflate. What do we know? What is the goal of central banks? To buy it all, to own it all, to continue to inflate. I don't care what comes out of their mouth about how much they care about inflation. Well, hold that thought because that's in here too. So, okay, on an unlimited scale, is to further allow banks to continue to inflate. Furthermore, to also push off for now an immediate lockup of the system. I'm talking about a liquidity crisis. You understand? Although the world is awash in debt on an unprecedented scale, there's not enough of it. We have to continue to borrow, and this unlimited bond buying program and wars and crisis to crisis to crisis is all the mechanism to allow that to happen. Okay. Just this past Friday, it was Bloomberg who first broke the story of the European Central Bank to begin unlimited bond buying, which reads as follows. The European Central Bank, pay attention to the wording here, okay? The European Central Bank will unveil an unlimited bond buying tool next week, starting tomorrow, to help markets better adjust to steeper and faster interest rate increases. Now I go on to say, look at the wording of the Bloomberg report or that statement. This unlimited bond buying tool is being sold as a way to help the markets better adjust to steeper and faster interest rate increases. Okay, what is being left out of this report by Bloomberg and everybody else right now, because you're not supposed to know, is an unlimited bond buying move by the European Central Bank, which will be followed up by the Federal Reserve, is massively inflationary. I mean, just obviously, this is a no-brainer. You should understand that. Moreover, this announcement by the European Central Bank sparked a stock market rally on Wall Street last Friday. Unlimited, listen to this part, please. Unlimited bond buying is massively stock market positive, as it further artificially suppresses rates, therefore fostering a risk-on environment, like I had said earlier. Meaning cash will make its way into stocks and equities. And subsequently, cash makes its way into the stock market. Okay, understand. At its core, you got this? Listen to this. At its core, the global financial system is rapidly becoming illiquid. I've covered this a lot lately. That is, For the current debt-based system to function, debt must be unrelentingly added to the system exponentially. It cannot remain static. It has to continue to increase and increase. I think you got that. Now, death of the current financial system will result in a locking up of the entire system, and all transactions stop. Not only do all transactions stop, but people will lose their ability to access any of the cash in their bank accounts, savings accounts, checking accounts, money markets, annuities, stock portfolios, CDs, etc. Interbusiness lending also stops. Okay, the result will be pandemonium in the streets. People will then look to the same entities. You know this. I've been beating this to death lately. People will look to the same entities who allowed this to happen by design, okay, for help. And out of the ashes, a new system will be introduced, a system of extreme control. There's only a little bit more. Just bear with me here, okay? The current debt-based economic model is dying by design. The current debt-based economic model is dying by design, this debt-based system. And this can be easily seen by simply observing the current action of central banks, and unlimited bond buying is a big tell. Here we go. There are other ways as well to see that the system is dying. The Federal Reserve, and I've covered this a lot lately, and most of you know about this, the Federal Reserve is deeply engaged in a scheme where it moves vast amounts of debt overnight back and forth between institutions. This repo or repurchasing agreement moves trillions of dollars back and forth between institutions in an effort to trick the system, you know this already, into thinking that there is more liquidity in the system than there actually is. Make sense to you? Okay, this is the last sentence or two. The current global financial system is insolvent. It's insolvent, okay? And without constantly fueling it with vast amounts of more debt, well, the current system dies, and it's dying now. I think this is exceedingly important, this document here. And like I said, I want you to have it. There is a link in the description of this video. I want you to ponder the things that I've covered in this document and what this means moving forward for you people. What do we know is going to not stop? Global debt is going to continue to balloon. It's going to hyper balloon. You understand? This mechanism is massively inflationary. At the same time, it's designed to push cash into the stock market, into equities. Again, this action by the European Central Bank, which will be followed up by the Fed, whether they're going to do it in your face or they're going to do it by some other backdoor mechanism, you get my drift? You know, they don't care at all about the economy, the fact that inflation is surging, and in no way is inflation peaking. Anyone that's trying to sell you that story is lying to your freaking face, okay? It's not peaking. It was not transitory. It wasn't peaking months ago. It's not peaking now. And with this mechanism of now unlimited bond buying and whatever else they're going to throw at us, another crisis, there's no way, okay? This whole thing is designed to cause inflation to continue to surge higher in an effort to strangle to death whoever's left of the middle class. You understand? All this is, people. It's a mode of control, a method of control leading up to a climax, a meltdown of the current financial system, a complete meltdown of it, a lockup of the system. We're already in a liquidity crisis. How do we know we're in a liquidity crisis right now? Because you can see what central banks are doing. There's not enough debt. Understand, the system must be fueled with more of it every single day. It can't stop. So central banks are now, what are they doing? They're in their end game, and this end game has been going on for a while, but they are now attempting to continue to inflate the global debt bubble faster than they ever have before. You understand? What this means, okay, for you and I, first of all, as I just alluded to in my lovely document, which I want you to have, again, link in the description of this video, this may be a game changer with regard to the market. Let's see how this affects equities. Are we going to now see cash and institutions start buying more and more stocks? Is the Federal Reserve going to get in here and start buying the market? Well, you know, we still have to watch a few things here. We have to see how this unlimited bond buying program affects dollar strength. If we continue to see the dollar get stronger, and I'm talking about its relative strength because its absolute strength is dissolving before our eyes. We're seeing, you know, record inflation here, surging at its fastest pace ever, honestly. So keep your eye on that. You need to keep your eyes on energy as well. You know how this plays. There are many dynamics that play together with regard to the market here, and I promise to keep you on top of this to the best of my ability. But understanding you need to keep your eye on the debt market. Forget about the yield curve inversion. I know how severely the yield curve is inverted at this point, and so do you. But does that tell us anything different? No. We know the economy is in free fall. This is not just an issue here in the United States. It's a global phenomenon. And do you really, really think this is by accident? Honestly, it's by accident? Huh? Really? Huh? No. This is central banks moving forward to fulfill their end game, to own it all. Henceforth, unlimited bond buying and whatever else central banks want to do with the cash they just add to a digital screen. You understand? All right, so that's it. Before this video gets stupidly long, and it's freaking 16 minutes right now, ponder what I have spoken about here, okay? What do you want to do about it? You still, in my view, want to bet against the debt and become your own central bank. Okay, that is holding hard assets here. I don't care what they're trying to do here in the short run. I really don't care to physical gold and physical silver. They're trying, and they have been very successful, to manipulate the price of a physical asset, okay, by rigging the derivative. It's upside down, people, but that's what they're doing. What else would you expect in an environment such as what we have? Global debt ballooning. Meanwhile, they're keeping the price of actual things suppressed. And I'm referring to commodities across the board, which are real things, not things that just exist in some fantasy land that are not on the elemental chart. You know what I mean? I think you do there too, right, people? Look, I really just have to end this video. It's getting long. I will elaborate more on all of this during the week as well, but get ready. Let's see what happens this week. I don't know about you, but I'm getting excited. All right, look, have a great rest of your day, people. Enjoy yourselves. Go make friends and influence people, or whatever else you got to do. But we're gonna get through this whole freaking dog shit thing because we have each other, and it's just so important to me. Love you a lot. Share the video, comment, and get your copy. Get your own copy of this. Link in the description of this video. I'll see you tomorrow morning.